going to be like, I can't hear me anyway.
Astonishingly, greater than 90% of the country's metro areas experienced home price growth, despite facing the highest mortgage rates in 2 decades. Guys, we're going to talk about that, as well as 4 offers that I produced on one of my personal properties, downtown St. George. Competing offers. It will go above the asking price in St. George, and it's 140 degrees today, guys. Jeremy Larkin and Jesse Paul.
Good morning, everybody.
Good morning, guys. Hey, happy 4th of July. Guys, we're pre-recording our show this week for the 4th of July. And I mean, it's 130 degrees today, and it's the 2nd, so you'll be hearing this on the 4th. It should be 140 degrees. It's almost always hot on the 4th of July, although a couple of years ago, I remember it was like overcast, and I thought, what's gone wrong? Is Mother Nature like taking a break? Jesse Paul, Jeremy Larkin, the Larkin Group Home Selling Team, KW Realty, Keller Williams Realty. We help people navigate and manage their wealth in real estate. This quote is, Jesse, and you read the quote already. It's from Lawrence Yun, the chief economist with the National Association of Realtors. Read the rest of that quote, Jesse, the portion in black. I didn't finish the quote.
In the current market, rising prices are the direct result of insufficient housing supply, not meeting the full demand.
Last week on our show, we talked about this book that we're reading, which is called Escaping the Housing Trap. And do you remember what it said, Jesse? The only way we'll actually solve the housing crisis is to build more.
Yeah, to figure out how to build more and to build more affordable housing.
Yeah.
Especially here locally.
Yeah. And get more creative. We talked about that last week. You know, using ADUs, accessory dwelling units. Look, compressing people into smaller homes. You know, this is smaller homes, townhomes, apartments, maybe multi-generational housing where you have multiple generations living together. There is so much there, and there's so much that I think we don't want to see in our market, right? So the follow-up slide, and I'm going to go ahead and share my screen. So guys, for anyone who's catching this, if you pick up this feed on Facebook or later on YouTube, you're going to be able to see what we're doing here. The follow-up slide here. With the continued imbalance between supply and demand, home prices are expected to
keep rising.
I mean, look, no buyer wants to see that. And we've seen that home prices in Washington County have tripled since the Great Recession, 2007, 2008. Well, since 2011, basically. I mean, 2011 is when the Great Recession happened in like 2008, but 2011 was the bottom.
Yeah, that was the bottom. Right?
That's when every one of us should have purchased a home. This is the Case-Shiller 2024 home price forecast, updated for June 2024. Jesse, Fannie Mae says, we think we're going to see almost 5% appreciation nationwide. Mm-hmm. Mortgage Bankers Association says, I think we're going to see 4.1%. Goldman Sachs, the bank probably more tied to the housing market than any bank, says, I think we're going to see almost 4%. The Home Price Expectation Survey, hundreds of these outfits, Jesse, that are like, they blend this all. Mm-hmm. What are they saying?
3.8.
3.8%. Well, Jesse, do the math for us. Take a $520,000 home. Okay. By the way, Zillow says 1.9, NAR says 1.8, Freddie Mac says 0.5%. So the average is 3%. Ready?
Yep.
Jesse, take $520,000 times 1.03.
Is $515,000.
Oh no, take a $520,000 house. 520. Oh, you started at 500. Thank you. So, sorry, I might have confused you. 520.
So that's 535,600.
Okay. I'm saying 520 because we're getting different things. It's kind of the median, is there?
Yeah.
So this means a $520,000 home becomes worth $535.
Yep.
By the end of the year. You're January 1 to December 31st.
Right.
So, this is just an interesting time because buyers don't want to see this.
Right.
Housing is at an all-time.
Well, and it's not what anybody was expecting, right? Buyers. I mean, I think, well, for the last year at least, all these forecasts have showed that it's going to keep going up. Mm-hmm. Locally here, we had a little bit of contraction because we went up so fast. We were so high, we had to contract.
Yeah, we saw about 6% come off of home prices.
And so, I don't think we were really expecting that to stop when it did. I wasn't anyway. I was expecting a little bit more, but then in January, it just kind of turned and the market started going back up again.
Let's segue from this. What every buyer needs to know about inventory. Well, Bill McBride with this company called Calculated Risk says, I always like to start with inventory since inventory usually tells the tale. Telltale. And currently inventory is increasing year over year, but is still below pre-pandemic levels. Okay, guys, let's put this into English. We still have less housing available than before 2020. But the population of the United States and Washington County has grown.
That's true.
Does this make sense?
Yep.
Okay. So look at this right now. This is existing home inventory nationwide. This slide is beautiful, Jesse. 2017, how many homes were available in May of 2020? 2017, I mean.
2017, 123. What is that? 1,253,854.
Honestly, he's like, if I just try any number.
I'm like, wait a minute.
Hey, I heard that there were 1,000 trillionaires.
When I was
according
looking at
to Biden.
that, I was expecting it to be local. But no, wait, this is national.
Yeah, I mean, Biden says there's 1,000 trillionaires before he fixed it. Okay, there's 1,000 billionaires.
Come on, quit picking on my dad.
So, on your dad, I love it, dude. I love it.
I'm talking like him.
Yeah, I mean, we know anyway, we could have a lot of fun with that. Boy, was that, anyway, the debate was nonsensical.
So
you had a 1.2
1 million,
1.2 million homes. And by the way, I've got it right up here on our screen. I made it a little harder on Jesse. 1.2 million.
Funny.
How many homes were available as of May 2024?
787,000.
Do you guys understand? That is 60%. There are nearly half as many listings for sale right now for buyers in the United States as there were 7 years ago. Jesse, what has the population done in 7 years?
Grown quite a bit, especially here. A lot.
If population has grown 7 years and there is only like 60% as many homes for sale or available for buyers, what is that doing to home prices?
They're going to go up.
Yeah. And at a minimum, they're going to stay steady. Okay. Isn't this amazing to think about? I think that people really need to understand this about inventory. So, if you look at changes in inventory year over year, and inventory, guys, we're talking about homes for sale. By the way, our show is brought to you by our friends at Guild Mortgage. I'm going to get Chantry on one of our next couple of shows. Amazing. He was in our office this morning with one of his guys doing sales training with our team, right side by side with us, chatting with me about coming in tomorrow and just calling side by side with some of our agents, calling our database.
Yeah, that'd be good.
This is interesting. So here's what people see, Jesse, and I think this is what confuses them. You ready? They see that inventory is up in Utah by 21%. Oh, well, inventory went up 21%. That's definitely going to fix the supply problem and prices will come down. That's 21% in a year. The problem is, what did we just say? There's actually half as much housing available for buyers as there was 7 years ago.
Yeah.
There should actually probably be like 20%
more,
or certainly an equivalent amount, right?
Yeah, because
Now, I don't know what's going on in Nevada, Jesse. Their inventory is down 25%. Last I checked, I didn't know people were clamoring to get over there, but whatever. Okay. 1 in 3 homes on the market today are new construction. And what are people buying? Jesse, because our good friend Joe Wright works with D.R. Horton. What are a lot of buyers purchasing because it's what they can afford?
Townhomes or an introductory single-family home. Things that they can get for under $600 or $550. And it's pretty hard to find a brand new single family home under 550 or at 550. Very few, but a few of them are offering that.
Correct.
But mostly they're buying townhomes because they can still get those under 500.
Right. Well, and here's what's interesting. When you look at this slide, guys, from 1983 to 2019, that's a long time. Only 13% of homes on the market were new construction.
Whoa.
It's now 31%. Well, this is good. It means they're actually introducing inventory. And we've established, this is like, guys, we hope that Jeremy Larkin here, Jesse Paul, the Larkin Group, Keller Williams, we hope that you really get insight from this.
So, and there's a couple insights that I want to talk about that could be the reason, right? First of all, so many people are sitting there with either no mortgage or a very low mortgage, interest rate wise, but also a regular seller.
Meaning that would have an impact on what percentage are new construction, right?
Yeah, because if you're sitting there and you're thinking about moving, and you've got an interest rate on your current mortgage at let's say 3.5%. Let's just be not crazy, because for a time there they were getting 2.5 and 3. So let's say 3%.
I talked to a guy yesterday. He's 2.8.
Okay, so 3.5 to 4 is reasonable.
Yeah.
So let's just say they're sitting there and they've got a couple $100,000 in equity. But if they decide to move and they sell that and have to get a mortgage, they are now looking at 7%, at the very least 6.75%, unless they spend a lot of money to buy that mortgage down.
And if they bought it down, they might get it down to what, 6%?
Now, if they were trying to compete with the builders that are offering incentives who are buying rates down to in the 5s, that's going to cost them a lot of money to do that. So they can't necessarily compete.
So Jesse, let's put this into perspective then. Right now, if you go back up, we said that in the United States, in 2017, there were 1.2 million homes for sale. In 2017, in May of 2024, this is May of each year, only 787,000. So what you're telling me is a good percentage of this gap, this 500,000 homes, are probably homeowners who are sitting on a 2.5 to 3% mortgage that don't want to put their home on the market.
Yeah,
is this correct?
Yeah, who would love to sell, but they just can't make sense of it.
Which means that today, guys, we went from an average of 13% of the homes on the market being new construction to 31%. Why? Because there is an inordinate percentage of them on the market, right? Gosh, this is fascinating when you understand this. Okay, now Jesse shot me over some slides here.
Local.
Okay, did you email it to me?
No, I texted it to you.
Okay, it just hasn't come through yet. So let's talk about this locally, right? So, shoot, I was going to see if you have not emailed. Oh, you text it. Okay. So Jesse's talking about, look, we're talking about today a couple of things. The first one is that there is a lack of inventory. There's a lack of available housing across the United States. 500,000 fewer homes than there were 7 years ago for buyers to purchase. This is keeping home prices high. We talked about the fact that every single outfit, think tank, the average of all of them, Freddie Mac and Fannie Mae and the National Association of Realtors and Zillow and all these people said, we think homes will go up by 3% in value in the entire year of 2024. 3%.
Yeah, and halfway into the year, locally, we're at 1.8.
On track.
We are on track for 3.
For basically 4 and change. Okay. Is this crazy?
So if that pace
this is crazy.
This is
crazy. Okay. So Jesse, let's talk about this for a minute. Okay. Available housing in Washington County. So locally, we're actually about the same. Isn't this interesting?
That's actually what I sent you.
Okay. So let's talk about this for a minute, guys. So Jesse sent over the local data. We pulled this from a group called Reventures Consulting. And every realtor on the planet should have access to this, but they probably don't. Okay. So this fascinates me. In 2017, there were 1,114 homes for sale.
Yep.
And in 2024, there were 1,251. So our inventory has actually gone up by 10%.
Yep.
So nationwide inventory is down by gobs, but locally it's actually up. Do you think that is part and parcel of the fact that we're seeing buyers definitely write offers and full price offers and sometimes over ask, but we're not seeing the melee.
Yeah, we're not seeing craziness at all, for sure. But also we are a much bigger market than we were in 2017.
Correct.
Much bigger.
Correct.
I don't think the United States grew by population as much as we did over the last 6 years. Does that make sense? 7 years.
I love that. What a great point.
So it would make sense that we're either equal to or a little bit above, because we need that much inventory now. We need a lot more than we did back then to have a balanced market.
Yeah.
When you're only selling 300 homes a month versus 600 homes a month, you need a lot more inventory to keep that moving.
You do.
So I think it makes sense why that's that way.
So the question that comes up that I think is valid is, well, do people, with home prices being so high and rates being high, do people still think housing is a good thing to own? Well, America's opinion of long-term investments. You ready for this, gang? Oh, I love it. I actually really love this slide. Well, because you're in real estate. Yeah, correct. 36% of Americans still think, this is as of 2024. 36% of Americans think real estate is the best long-term investment. 22% think it's stocks and mutual funds. 18% say gold. I need to move this Zoom. 13% say savings. 4% say bonds. 3% say cryptocurrency. Yeah,
wow.
We've not figured out yet. Okay. 36%. Jesse, the nearest thing to that was stocks and bonds and mutual funds at 22%, which would be the most common investment class in the history of the United States. Okay. So what I want you to know, if you're sitting on the sidelines as a buyer, 36% of Americans still think that housing is the number one investment. And side note, when 22% said stocks and bonds, 18% said gold, 13% said savings accounts. It doesn't mean that the people in the stocks, gold, and savings account category don't also think real estate is a good idea.
They just don't think it's the best.
The best, right. Because you have to realize that many of the people in this real estate bar here also probably owned stocks and bonds and gold and savings and vice versa.
And what's interesting is that, when we look around our circle, let's just call it our circle, how many people over the last 2 years when a lot of people were like, nope, we're not doing it, the market's crashing. A lot of the smartest people I know we're still looking for deals. We're still looking for real estate.
Well, look, we've said a million times that in 2011, 2012, we wish we'd have purchased 50 homes. Well, comically, I'm about to list, I'll be putting a home on the market in Washington City, north of the freeway for, a client of ours. And we sold his father's home, and his father referred the son to us. The one on 700 East by Steve's place over by the university.
Oh, yeah.
I wish I would have purchased that one.
Yep. I remember you saying that.
And I didn't purchase that one because I thought the market was too high. Duh. By the way, that home's up by like $75,000 since then. Oh, and that was a couple of years ago.
Yeah.
So it's obvious everyone wishes they would have purchased property in like 2011.
Yeah.
But what's amazing is I wish I would have purchased property in the last 3 to 4 years, 2 to 3 years. I have purchased property. Okay.
Yep.
So let's shift gears.
And so have I.
So have you. I really like that. Jesse, people want to get a lot of money for their home, right?
Yep.
So I just pulled up here a home that we just put on the market. This actually happens to be my former residence. Contrary to popular belief, I actually lived in a really cute little tiny home downtown St. George for a really long time. We call this property The Nest. And at the time that we have, which is about 5 minutes.
Perfect.
We've talked about this a little bit. I spent the last 75 days preparing a home for sale that, 60 days, that used to be in my primary residence. It's down on 200 West. The address is actually 144 South 200 West because this is right here on the screen. This is the boring old multiple listing service listing because it's not exciting. But if you were to come into our website, gostgeorge.com, and you just put in, again, that's gostgeorge.com, and started typing in the address 144 South, you would see it pull up. But look, we have stuff in Salt Lake, South Jordan, 144 South, 200 West, St. George, Utah. You can actually look at the property right on our website. Big old, beautiful photos. And when I decided to sell this was actually a property that I had a 2.85% mortgage on. I would be qualified as one of those guys that you'd say, why would you sell it? Why wouldn't you keep it forever? Well, what I did is I looked at the landscape of my portfolio. I also have a home equity line of credit tied to it that I use to purchase other real estate, and I don't like the interest rate I'm paying on that. And so I said, okay, I have a couple of choices. One is I could refinance the home equity line and the mortgage together, but then guess what I'm going to be stuck with? A combined rate of 6.5%. Or what I could do is sell the home. I purchased the home. I acquired it. It's kind of a strange story, but 6 years ago. Well, there's been a lot of gain. So much gain that I took equity that was in the home and used it to purchase another property and then used it to renovate a property. Well, I finally decided, I think I'll sell it. I'll realize the gain. Over the last 6 years, I'll pay off the home equity line of credit and we'll put somebody in it that will enjoy it. Okay. So there's one of the reasons if you're an investor or a second homeowner or a landlord that you might want to sell a property. I don't know that it's a flat out just keep everything until you die type thing. Sometimes you want to sell it and take a profit. Well, what we've done, we didn't have to do any of this. Jesse, could I have sold this home overnight, 24 hours as it was?
Yes.
Okay. So I invested between $16,000 and $20,000. I need to get the final receipts, probably $18,000, into repainting the exterior. That was all the brick, repainting all of the soffit and fascia. We touched up, redid the planters, the landscape planters along the front of the house, re-graveled all of the planters in every direction around the home. We went ahead and, as we're scrolling through here, we pulled out an old white picket fence that looked like crap in the front yard. Where the holes were left, we installed solar lights from Costco with gravel around each one. Every person that's come to the home is like, where'd you get these cute lights? They're thinking like they're designer lights. I said, Costco.
That's crazy.
We went in the backyard. We filled in some planters that the gravel had kind of gotten thin in. We went in the home. We replaced all the cabinet hardware in the kitchen and bathrooms with like Home Depot hardware, just so it updated the look of the house. It's just like simple $3 per pole hardware, right? I had the grout cleaned all over the house, Jesse. I pulled the solar tube down and cleaned all the stuff out of there. While we were moving through the home, we replaced 7 light fixtures that were out of date. I did that for about $500 plus labor at Home Depot. These were really simple light fixtures. We put new countertops and mirrors and sinks in the bathrooms, but we kept the original cabinets. Saved a fortune doing that, right? Just tell me I have 2 minutes. By the time all was said and done, we cleaned the grout. We touched everything up.
Changed a few lights.
Yep, which we talked about. We had the home professionally staged, right? Professionally staged. I even, guys, hung 2 pots out on the front of the house, hanging pots, and put one by the front door so that when people came up, it was delightful. How many offers are we sitting on?
4.
4 offers, all at full price and above. Now, people would say, well, look, this is a cheap home. It's under $500,000. It is. We named the house also. We call it the Nest. I had agents literally reach out to me going, hey, I'm calling you about the Nest. Do you have any offers? They'd text me, hey, I'm texting you about the Nest. Can I show it?
That's so good.
So we even went as far as giving it a name. We kind of referred to it as the Nest in our own life, right? Guys, how you prepare a home and how you market a home, Jesse, does it make a difference in the ultimate sales price?
It does. It does. Definitely.
If you can take guidance.
So let's talk.
And by the way, Blue Form, scream in my ears because I don't know how long I've got here for my 25. I just had a timer set. So
real quick, what do you think the difference is? Because you spent $18,000, where you're going to be now versus where it would have been if you had put it on the market.
$50,000.
I think so too. I think you made yourself $50,000 on top of your 18.
No, not on top of. No, I didn't say on top of. No.
Okay.
No.
Okay.
Not on top of.
So 32.
I don't know. I don't know.
In your
I don't know
pocket,
what the number is. What we're saying is, I think it was a $50,000 swing had I put the home on the market without spending $1. $50,000.
It's a good trade.
$50,000 swing.
It's a good trade.
Do I really have to paint my front door? Well, if you want the most money. Should I really replace my front doorknob because it looks like crap? You probably should. Do we really have to clean the grout? Yeah, it's gross.
Yep.
Should we really put the same color of LED light bulbs in every fixture, Jesse?
Should we really pay attention to our light switch?
Everyone.
Make sure they match. Make sure they're clean.
Yeah. By the way, I replaced $40 in light switch covers.
Makes
Guys,
a difference.
If you would like to well, that was your house. Yeah. Well, I won't renovate your house for you, but I will tell you exactly what to spend money on, what not to spend money on, and how to put the most money in your pocket. Visit us at gostgeorge.com. I love that question you asked. What a great question. Gostgeorge.com or Google the Larkin Group. Let us help. I told my father as he walked away the other night, he came to look at it. He said, man, I can't even believe what you guys did at this property. I said, Dad, if our clients will listen to us, we'll make them a lot of money.
Yeah.
GoSt.George.com or Google the Larkin Group and we'll help. Over and out.
Thanks for having us.